Greetings viewers and subscribers on the Sports FX channel. Now this is round 2 to banks and liquidity in Forex. Now I'm going to go more in depth in how the banks operate. So thank you guys so much for viewing that first video. Please remember to hit that subscribe bell. It's 11 a.m. right now. I'm going to kickstart it on Euro USD and I'm going to go on gold. So I gave you guys the first initial breakdown. I told you guys that the money is put in the first month of the trading year. That's where the money is put in to kickstart everything for the year. So it is the first month that you essentially pay close attention to on the chart, and the high and low that first month sets and the subsequent moves. Now the months that we watch after on the charts are the breakout months. The breakout months of many assets is the month of March. So quick recap, as you guys can see, Euro USD is in fact correcting. Absolutely no surprise here. So I'm gonna do exactly what happened last time, and then I'm gonna scale it down a bit, showing you guys exactly what you need to see. So this is January's high, and we're going to mark out January's low. Just have to show you guys this quickly. Horizontal ray. Now take a look, tell me what you notice. The high that the market price made on the 1st of January 2021 being obeyed. First 3 months after that low was respected and then eventually broken come the month of February. Market price then went and set the low at the time right here. Now after that happened on the chart, we saw a massive 2 months worth of buy. Now as I pointed out in the previous videos guys, what exactly happened in the months of April and May was an opportunity for many persons who missed the first 3 months worth of selling. Those that didn't enter into the month of January or February, it gave them an opportunity to jump in back, because what happened right here, the price was so discounted that many of the top institutional investors did not want to place their entries right here. So price was so cheap, so the market maker sent the price back up to an era point of interest to attract more sellers. That's exactly what happened. Now, for those who might dispute with what I'm saying right now, pay close attention. The high that the market price made to kickstart the 2021 trading year of the asset Euro USD, you notice that high wasn't broken? So what happened was many traders were trapped at buying the price at this zone at a crucial exhaustion area, and also a historical zone on the chart where, selling normally takes place. But that's on the technical side. We're focusing on the banks. So whereas retail traders are reading this and saying, well, the market price is showing us that Euro USD is going to shoot back up, those who understand the overall market context, the fact that the true move of the market would have been bearish for a number of other factors, which I won't cover all of that in this video, I'll cover that in the rest. But the market context clearly showed us, listen, price got discounted, first wave of sellers collected their money, those who kept on selling at the bottom. Not only was this a stop out move that lasted for 2 months, but was also an opportunity for other top investors to jump in, and look at that, price is correcting. The month of August gave us the low for the price of Euro USD at let's get the actual price, 1.16606, and here we are right now. Come September, you're literally eyeing up that low, getting ready to be broken. Once that low is broken, we're going back into some more historical eras. Now let's take it a step further. So give you guys the overall structure. Now let me show you how the money is put in little by little. Now as I mentioned, it's all areas of liquidity on the chart. Areas of liquidity on the chart are riddled all over, and this is where the order block analysis comes in. But I'm just going to show you how to identify these areas and the implications of the massive move that is going to take place. First main example, we're going to use that period that gave us the strong buy-off right around here in the April to May period. Let's look at the dynamics of it. So I'm going to draw up a rectangle box right around here. Now, this area is a strong consolidated range, but what we saw on the asset is that the market price, for all indications, gave us a swing high of structure and we got a swing low of structure, but overall investors were trapped in this region Many persons had their buy stops and their sell stops placed, and their pending orders, and they were triggered left and right and all over the place, and many persons got stopped out. But eventually the money that was being put in the market that was going to give us that bull run was being put in this consolidated range piece by piece. Now traders, in this moment, many of you are confused, especially the retail traders. But those who understand banks and liquidity understand that money is being put in for a strong move to take place. And what a move it was. Take a look upon market price making higher lows, and we got what is called a crucial break of that. Let's get this out of the way. I want to draw a line right around here. A crucial break of that swing high structure. That was it. The market gave us a clear indication of where price was going. Price bought, went to an era where historically resistance zone on the chart. Market price became discounted, stop hunted those who bought at the top, and then after that we saw a massive move. Now question, is he going to repeat the process again? Certainly he's going to repeat the process again. Let's take a look. One more era of market price consolidation. Now, all of these eras, liquidity eras on the zone. What happened right here? So again, the same principle is applied. We got a swing high of the structure. Investors trapped. Pending orders being triggered, but there was no clear break of this zone. Now, look what happened right here. So we got a break, right? Market price then went, and there was no follow-up. So many persons read this break and said, all right, it's going to continue to fall. Well, after a break of a consolidated range, what you need to take a look for and expect to happen next is that there's going to be a stop out move. He's going to clear the floor. He's not only going to stop out those that are going to be on the right side of the market, in this case the bullish side. He's also going to be targeting those who are on the wrong side, so those who are going to impulsively sell. So when those guys saw this fiat break out of the consolidated range, many of them, they sold. Had their take profit down here, yeah, oops, had their take profit down in this region, TP, and had their stop losses here. So they provided the liquidity. Now, let's say you did in fact get stopped out, all right? What you should have noticed was that the price, you should have drawn a line here. Notice that the price respected that low, and the market price subsequently entered back into this area where the consolidated range is, made one more move, but the low right here so would have been respected. Last stop hunt, price just kept on showing us that, listen, as choppy as it is, due to the fact that it was inside of this region, price was correcting and still going higher. You should have seen a true break away from this block to indicate that price is heading back down for you to say a true sell-off is coming. Now, it trips up a lot of traders, but I can guarantee you, once you put this analysis into practice, you're going to get a better understanding of what's taking place. Now, let's continue. So, price then continued to push higher. We got a high, and then saw price selling, price becoming discounted, because many investors wouldn't want to be selling, well, buying their price at this area. Sorry about that. Now, right around here, saw market price entered back into that crucial zone. Now, where did it enter back into? Into an area of market liquidity. I'm telling you guys, whenever you're in doubt, look to the left. Even in terms of the banking of the market, it's not going to become 100% identical, but the market price is going to go into areas where they got the investors to give us that initial move. And that is exactly what played out on the chart. Price came, still respected that. Market context came back into play. Here we are right now on the Euro USD. Overall market price correction from here to there. Let me go on gold. Same principle is going to be applied. Let me show you guys something. I'm going to start this one on the daily chart to show you guys that even in this period, we saw the overall liquidity era, the blueprint of the markets being shown to us. Let's get you out the way for a second. So many persons kept on crying out that the price of gold was going to, go back to the 1900s, and many persons got emotional. Many persons were just all over the place. Now, Work with me now, people. I'm going to show you guys something. First, come on. I'm going to start off by establishing the market context. Alright? I'm going to establish that high that gave us that strong break right around here. So, bunch of boxes, but work with me. I will deal with banks and liquidity right now, okay? So, right around this region in the month of June, where we saw the correction of the market context of the price of gold, we often saw eras in which the price began to, consolidate for quite some time. Now, take a look right here, so this is a prime example of the market maker at work. Investors were trapped in this era once price got discounted, and immediately buyers jumped in. So around this structure, we got our typical swing low of structure. And then we got the swing high of structure right around here. So this is the region that market price would have to truly break out of. Let's call out these prices quickly. We'd have to see price break 1797.21 and 1760.77 for you to validate that price is truly leaving this zone. Listen, I have to stress this here on the chart due to the fact that so many traders lose money in here. Now look what happened. This is the psychological part of this now. You cannot be looking to swing trade in this era until you have gotten a clear directional break. What I mean is you have to see where the market price is going to be going in terms of market context, not market structure. If you follow market structure, you're going to think that this is just going to break out and I can just place a buy stop or a sell stop around this region and hope for the best. And trust me, he's going to wreck you. Let me show you what he did right around here. Buy stops were triggered, they got wrecked. Right around here, we saw a break. Well, actually appears that even went and took out the swing low. And after that, overall correction, price entered back into the zone. What tricks many traders is that they are so emotionally caught up with the move, not understanding what's taking place, to the degree that when they see a strong consolidated range such as this era, and then they see seemingly a breakout of that zone, they jump in on the first wave and provide the liquidity that is needed, and the market maker triggers a stop on, and then look at that. Now, remember what I said. There has to be a break plus a follow through, right? Break. Price began to do the same thing over here. Now, more money is being added, but he has already gotten the first strong wave of buyers at this region, but many persons who impulsively bought right here again, he's stopping them out. The market went into an imbalance era. I'll cover that into a next video, but work with me. It's a lot, guys, to understand this. Notice we see the era respecting the first consolidated range structure, then we have a true break. So at this point, you're on the right side of the market, but many of you, due to you not understanding what's taking place, you would start doubt. Then the price came back down, retested this level. Let's get this out of the way. And look what happened. Structural zone respected. Market price went, set the new high. But guess what? We're not seeing any true break of this zone. Not seeing any true break of this region. So market price then went, stall around this area for a bit. At this point, if you're understanding what's taking place, marked out all these previous areas, you would notice something is wrong. Why is the buy-off not truly continuing? Why each time I see areas go to this price zone, we see rejection come through? And look at that. Break. Because I tell you guys, it's not the news that move the market, The market price is already going to be hinting to you where it's going to go. You're going to have certain moves on the chart that seemingly indicates a strong breakout of that era, when actuality, it's just short term. False breakout. Look what happened. Price then, upon struggling to go higher, had to dip. He went hard. Dipped, collected enough investors. So, broke past all of these regions like they were nothing. Now, once he had gained the liquidity that he needed right down here, that's when the true buy-off began. Many traders, sadly, kept on selling at this point, but he has got the liquidity that he needs. He has attracted enough buyers, so now price is clearly going to be heading up after this. And that is exactly what took place on the chart. Market price then went, started to climb. Then we saw right back into historical zone. Let me show you. I'm gonna have to zoom out, pull across. It does the same move in this area, same area of liquidity, collects more orders, one more stop up move. So you see guys, initial break. So the first wave of those who jump in, he's gonna stop them out. But look at the structure. He has got the liquidity way down here now, so the buying is on, you know. Price went, let's see, this is the 26th, 30th, 1st of September. Now, in keeping with the overall market context, remember, you know, the market context is a true long-term move of the market. So, no matter what happens, if you're on the wrong side of the market context, when the market corrects, it's going to be so fast. 1st of September, we even did one more right around here. So, this was the final move of consolidation. Notice you only got roughly 8 hours worth of buying after this break. So, he trapped buyers at this area. Many persons bought here, made some money. Those who kept on impulsively buying, not understanding the true context of the market, paid the price. Look at how price was corrected. Alright, let me draw one more box. All these areas are areas of liquidity. Investors being trapped, swing high, fake out, kept with the market context, kept on driving the price down. Now upon zooming out, you're going to quickly notice. Alright, here we go. This is his market maker pattern. This is the handiwork of the market maker. Short-term buys to some degree, or you want to read it, but overall context of the market, line chart, what happened? Still bearish, right? So that's the blueprint on the chart. Once you start to understand this, you're going to be able to better prepare for a big move on the market, and then you're not going to find yourself depending on candlestick patterns or stuff like that. Those things will mess up your brain in Forex. You have to understand banks, areas of liquidity, market context, stop-ons, and then you're on your way. You won't find yourself being tripped up by these moves, being trapped in these areas and trying to force the market to go in your direction. Alright, people? Hope you guys enjoyed this. Stay tuned. I have more coming out in this topic. Peace and God bless.